My name is Michael Guyot, publisher of the Lead Lag Report. This should be a great conversation with the Wolf of Weed Street himself, Jason Spatafora, who is very well known in the cannabis space, built quite a following over the years, and I think has a lot to bring to the table in terms of talking about this space. I spent the last hour reviewing some of his YouTube commentary. I think this will be a well-timed conversation because it looks like maybe we could be at a turn for a lot of these let's call them quote unquote speculative stocks. But Jason, for those who are not familiar with your background, just introduce yourself to the audience, who you are, how'd you get involved in markets, and why cannabis?
Hi, everybody. So, Jason Spatafora, I started getting involved with cannabis in the summer of 2013 after I saw then Attorney General Eric Holder basically make a statement that the DOJ was going to lay off of individual states. I had a regular job before then, and I started out small like everybody else. I mean, most of the things out there were penny stocks, but I just kind of saw this as a really interesting industry, and the volatility was nuts. So like I made my first purchase, it went up like 50% in 2 days, and then 2 days later it dropped 50%, which I found really attractive. And over the years, and even starting then, like the information just really wasn't available. And as I took my deep dive into the sector, you had to basically go after, information in all of these cesspools, like the Yahoo message boards, the iHub message boards. There was nothing out there. And I started to kind of cultivate my own information and realize, like, I have a lot to say, but I really don't want it coming back to me. So I created this Wolf of Weed Street handle, one day after seeing a trailer for Wolf of Wall Street. And I thought it'd be, kind of a parody, like the anti-Jordan Belfort. And, I couldn't be everywhere at once. I had a full-time job. So I would, tweet to people like, hey, do you live in Denver? Do you live, here in LA? I'll send you $100 on PayPal if you can go and take a look at this company. Tell me if it's for real or if it's a PO box. And if it's real, these are the questions I'd like you to ask. And, that's really how it started. And then Colorado went legal. And we just saw this massive, massive speculative run up where stocks were going up, 10,000%. And, most of those things kind of crash. I avoided the first crash by chance because I went on my honeymoon to Thailand, and I was like, well, I don't want to be holding all these penny stocks, and I was up so much at this point. I wasn't, I was doing it full time. And, I went back, and because I was like, man, I just dodged a serious bullet. Let me see how far back I can go with these stocks and see what they did around this time of year. And I started to notice, OTC stocks just dropping off a cliff come March, and kind of using that historical price action and volume cycle. I was able to, I'd be in the summer, be out by, January, February, and back in the summer. If I still like the story, I'd be buying some of these companies back at, 70% discounts, 50% discounts. And that model has held throughout the years. So, if you go to my Twitter and you type in like Ides of March, which is, the play on the day Julius Caesar was killed, I've been saying, come March, in the best scenarios, even in strength, we still get these massive drawdowns. Now it's a little bit different. I mean, it's a lot different because now these companies are actually making tons and tons of money, but they're subject to so many rules and have had so many, grenades thrown at them because of this latest custody issue, and the stocks that you could buy in during COVID and or the summer of 20, which some were doing like 80 million a quarter in rev, are now doing 300 million a quarter in rev, and the price is below those time periods. So it's one of those sectors where, once it re-rates, everybody is going to be talking about cannabis, and all the bulls, that were super bullish all the way up and all the way down will be proven right. But right now, we're just kind of at the mercy of the overall markets.
Let's talk about that information cesspool bit for a moment here, because when you think about it in terms of volatility, traders love volatility, right? Investors, in theory, really shouldn't care about it if they have a long enough time frame. But if you're talking about those times when you would literally ask people to go and see if something is a legitimate company, like to actually go visit physically that location, presumably that's not a way of trying to determine the long-term viability of a company. You're just trying to cut off the tail risk that you're investing or trading rather in a fraud.
Yeah, I mean, look, like I was an English major. I was a double English major, English and creative writing. I suck at math. I couldn't read a balance sheet for the longest time. And the only trading book that I'd ever read to that point was Markets, Mobs, and Mayhem by Robert Menschel. And that book, and just kind of understanding the animal spirits of the market, was the only thing that I really needed to be successful in cannabis, because retail investors like to buy things cheap, and they like to push things up to just crazy prices. And what I was basically doing was I would find a company, like I'll give you an example. There was this company called MSIG, MCIG. And in January of 2014, it had a market cap of like $150 million, okay, which is nothing, right? And it was doing like $1 million a quarter. And, I had heard about this vape company, which was right like 10 miles from my house. And so I went on a little field trip. I put on a suit and I go into this thing and I'm like, yeah, I'm from the Wolf Fund. I just wanted to see what the operation was. And because it was a publicly traded company. And, the first address I went to was the wrong address. And then I eventually found it. I went in, introduced myself, and I was like, can I have a look around? And the CEO at the time gave me a tour, and that thing was trading at 004. And then I went in and started looking at their financials, or their last quarter, and they were doing like 50% more revenue than that company, MSIG. So I bought it, right? I bought it at, like 004. I just bought 1 million shares, pure spec trade, which, like $4,000 at the time for me, that was like, 20% of my portfolio. And then I just would tell the story like, hey, look at this company. It's doing more than this. So I would try and find hyperinflated market caps. I mean, they were all hyperinflated, but then find one that nobody had discovered, and everybody would gravitate to it. And that company, for example, ended up going to 45 cents in the next 3 months, which is, over a 10,000% gain. My $4,000 became almost $500,000. And, you were basically playing a giant game of Frogger in the early days. It was just kind of like get in, get out, find the next shiny object that everybody was chasing. And, you just couldn't stay long. And those were the early days. Now it's much different, but to kind of put it in perspective, none of those companies exist anymore. And after that 2014 bubble burst in pot stocks, we really didn't have a bull market start up before the midterms in 2016. And now the story was what's going on in Canada.
So let's talk about that, focus on Canada for a moment, because that's often how most think about investing in the space, given obviously the federal legal issues here in the US. Talk about what exactly happened with Canada and how did that cause a resurgence of interest?
Yeah, so The Canadian companies, so, really the early ones were Aurora Cannabis, which everybody knows, Canopy, which at the time was Tweed, Kronos, which had a different name. I forget what it was, Organogram. And then, like Afria and a couple other companies. This is before Tilray. These, like Trudeau, before he got into office, it said like he's going to make medical marijuana legal. So that was the first carrot. Okay. You could see like, hey, this is going to be a legal market. These companies were getting all of this money from banks because it wasn't like the US. They were spending tons of money in promotion. So these things ended up being very liquid. And as, all of a sudden, medical marijuana passes, then it was the next thing was, okay, we're going to go fully recreational. And you saw just a ton of money pour into the industry. So to put it in perspective, Aurora Cannabis in early 2016 was like 35 cents. By September, it was like 90 cents. By November, it was like $3 on the heels of Constellation Brands coming in and buying like 9.9% of canopy growth. And once Constellation Brands came in, it basically it changed everything, because now all of a sudden people are looking at it as an even like a really viable market. And still we had that drawdown. So like the drawdown from the peaks of 2016 to the summer of 2017 was 70%. And then from that low in the summer of 17 to call it 2018, we saw 1,000% move in all the top names. So people were making a lot of money. The bankers, the Canacords, the BMOs were killing it. And they just kept throwing more and more money at these companies, which basically created some of the problems for these companies now, because, all of a sudden it became an arms race. The way that they would value those companies was funded capacity. And I'm doing like air quotes for funded capacity. So basically what that meant was, hey, we've got 1 million square feet that's fully funded. This is how much cannabis we think we're going to be able to grow in that facility. And retail investors ate it up. And the whole story was, funded capacity. They're going to be doing X, Y, and Z. And, we saw this massive bull run. If you go from like 2016 on Aurora, like the low of like 35 cents to its high right before Canada went legal. So basically 35 cents, $12. Canopy was like 250 to 61. We had the whole Tilray thing happen, right after Constellation Brands came in with 5 billion for Canopy. So yeah, it was just nuts, but everybody, still had too much of a twinkle in their eye going into legalization. So when legalization happened, which was October 18th, 2018, I was 80% out, because, one of the things that I've noticed and made notes of over the years was all big news in cannabis, for the most part, has been sell the news. And that's really stayed true. Now, if the US gets some of that really good news, I think it changes things. But the model has always been, peel off before good news, wait to get back in 20, 30% lower. And then, by March of 2019, I was completely out. Then the sector, just because, once legalization happens, the dynamic changes. Now it's, you have to execute. And all of these companies weren't executing. And, so we saw a big drawdown into the summer of 2019. And I was just flush with cash, just dying to get back in. But I just felt like, this is a lot of money. It was basically my whole cannabis portfolio I'd built up from 2013. Maybe I'm too biased because some of these things went so high and now they're 50% off, 60% off, similar to what we're seeing, in the market today, like something like a Roku goes to 450, then it's like 80, and people are like, wow, it's really cheap. So I actually hired a quant to give me some analysis. And this was the end of August. And, I gave him all these points that I wanted. And when he flipped back the research to me, I was just like, there's no way I can get back into these things. And I felt like I just dodged another bullet. And then the sector basically got torpedoed right down into COVID.
That point about all big news becomes seldom news, I think, is interesting because presumably that's because you don't have institutional money that's really playing the space. So if it's largely dominated by retail, which is just reacting off of a chart as opposed to actually doing real due diligence, they get sucked into the narrative of the moment. The news happens and they hold on, while guys like you who are seeing this stuff and have lived this long enough say, maybe a lot of things are already priced in. It's time to actually protect a little bit against the decline. Do you think that because it's not as institutional in terms of equity momentum, that it becomes easier to trade it because it's more obvious to see where the kind of reactionary mindset is going? Talk about that dynamic, because I think it's intriguing, this idea that the better markets are ones that tend to have more sort of, let's call it, uneducated speculators, right? That are playing the field.
When the volume is there, it's a really good trade. And the strategy that I've employed over the years, which I learned from pot stocks, and now I employ it in my regular portfolio, is to I core trade. Okay, so I use the 80-20 rule. So 80% is the position I don't want to sell, and then I use 20% to trade, and that protects me during the drawdowns. It also, on the and so basically the way it would work is, say I bought a stock for $10 and I bought 1,000 shares. It goes to 11, I sell 200. It goes back to 10, I rebuy 200 and I pocket the money and I wait. I wait to see maybe it goes lower. And I just do this the entire time we're on that upswing. It's something that I did, during this latest move. I got back in July 20th, 2020, and realizing like, okay, we're going to have earnings in a month. We're going to sell a bunch into earnings because we'll see a pullback. And then we got pullbacks all the way back to my entries, and then I'm reloading and then adding that extra cash for that month of trading back into positions as protection. And I'm doing this the entire time we're on the upswing. So like having a set of rules in this sector is going to save you. That's always been the case. And, every year, I'll say like Ides of March, and I give the warning, people will be like, you don't know what you're talking about. Everything's different. And then, we see the same things happen. I mean, even this year, I put out my Ides of March warning. To put it in perspective, MSOS was $22.50. And everybody was like, I don't think it's going to happen. We've already pulled back so much. And now MSOS is, 1150. And you see, even deeper moves in some of the better companies.
And, I've had Todd Harrison, who's a friend of mine, on these spaces before. And, he's the first one to say that, this last year and a half has been brutally difficult because you've had such a divergence of within the equity markets in terms of large cap S&P and then really kind of everything else beneath it. I'm sharing at the top of this space here, this point that you put out, that those that think that a particular investment theme, in this case, obviously MSOS, that it can diverge while equity markets broadly are in a downtrend or are having some kind of bear market pressure, that it's a fantasy to think that you can get such divergence because everything is still kind of co-moving off of beta. So presumably that means, Jason, that you're thinking about the macro environment too, more than just, the individual stock idiosyncratic stories or the space overall and what's going on the legalization front. How do you try to marry the macro environment to the cannabis theme And given where we are now, do you get hopeful that we might be closer to that kind of buy the low type of environment?
Yeah, look, I still buy, but I also trade options as a means to, what options are meant for, which is, increasing the size of your portfolio, not for money. So, I make an option trade. So I was, making option trades this morning, and, I'd take half of that profit and buy a bunch of these things, right? But to think that with everything that's going on in the overall market, the economy, inflation, everything, that we're just going to diverge. When we still have major custody issues with the stock, you're basically saying if like you thought that today was the bottom, right? On this, like I'm looking at the SPY right now, it's 389.91. If you think that right now is the bottom, then yeah, I think you should, probably go for it. But you also have to factor in that during 2021, we were hitting an all-time high on pot stocks, and then the SPY just made this monster move, and so did all equities, and we went the complete opposite direction for the last 18 months. That's not normal, right? So you have to understand that, look, that custody issue is the biggest issue that's facing this sector. It doesn't matter that these companies are growing because it's being rated by retail investors that don't have the capital to scoop up all the supply that's coming out. And it's supply from, really good acquisitions that these companies made, because the US companies, cash is way too valuable. It's a very capital intensive business. So what did they do? They made acquisitions with stock, and that stock gets bled out, every month. And once custody got pulled from, a bunch of the primes, you're basically leaving it in the hands of retail, which was dicey. So, yeah, I think, like, I don't think that we're at a bottom on the SPY. And if I don't think that we're on a bottom at the SPY, then I don't think that we're on a bottom with pot stocks. Now, I'll say this, like, if you've never invested in the space, it's not a bad place. It's an unbelievable place to scale in. Like, I think that the top 5 companies will give you better returns once custody is sorted than anything out there in the market. And like I said earlier, everybody is going to be, talking about pot stocks, right? These things like from their COVID lows, you were looking at like 500 to 1,000% moves on some of these things while the business is growing, while more states are legalizing. In 2014, the legal cannabis industry was $1 billion. Now it's 25 billion, 9 years later. And it's just going to get bigger and bigger and bigger. But, we have some maintenance. It's a difficult trade to make if you just close your eyes and think, okay, I'm just going to hold this for 5 years, because that's what everybody in Canada said, and I watched people, buying Aurora at, 10, $12 while I'm selling. And now I don't even know where it is, but I know that they had to do a 12-to-1 split. So basically the price is like 15 cents now, Tilray, which hit 300, is at 350. You can't just throw all caution to the wind in this sector. You have to manage your positions. You have to take, you see $100 bill on the ground, you have to pick it up, right? Because you can always come back. Like the cycles in this industry, you can set a clock to them, right? And that's in the best of times. Yeah, I think these valuations are obscene. They make no sense. But that doesn't mean that, just because it's lower, I'm just going to start using lots of my capital, and I'm still invested in the space, you know. But the difference is in February 2021, like as a rule, if anything that I own hits an all-time high in February, I like I sell 30% and it never comes back. Like that, I never put that money back in the market. And so I'm selling 30% there, on some names, some I'm selling more. And you're watching a 70% pullback. That 30% is so much protection, and it also gives me the ability to, when I think that those things happen, like custody can come back, when safe banking passes, when these things are uplisted, they're not going to quadruple overnight. So I don't mind buying on that string. In fact, I can't wait to buy them on string. It's a crazy sector, but I've just watched so many people, dollar cost average their way into ruin, because look, most people that dollar cost average, most retail investors, at some point the fatigue and the mental stress of watching something just go lower and lower and lower is too much. And then you get back to, maybe you're down 50%. You're like, you know what, I'm just gonna take it off the table. And to go back to your broader market question, the area where we are now, right? For people that were selling high growth tech in the fall, they don't need to catch a bottom, right? Some of these things are pretty good value. You can just add the spread. And we know that when markets bottom, everybody is going to pile into growth, right? Just like they did during COVID. The question is, it's like, if those legislative things haven't materialized in cannabis, do you put your money into cannabis and wait and watch the market rip again, which it will? Or do you put your money in growth, watch your growth rip, and then take some out when you can buy on string? Because, during COVID, some of my favorite companies were super low, and I bought some of them, 50% higher. But like the COVID lows in March for the pot stocks and pretty much everything else. But the money that was made in growth during COVID that basically paid for all of those positions and will give you a risk-free trade. It's going to be the same thing here. So, you've got to be conscious of your number one job when you're investing is to get the best ROI possible, not to catch the bottom, not to sell the top, but to, make money, take off risk, buy value, and keep doing it again and grow the size of your portfolio. You can't be 80%, 100% in pot stocks. It's insanity, and I've seen some really smart people in this space ride cannabis stocks all the way up, during the whole Canada boom, and then all the way down. And then they did the same thing for the US companies. It's pure insanity.
Yeah, and that point about the emotional toll is an important one, right? Because the reason why buy and hold is a fantasy is because of drawdowns, right? And nobody holds into the decline. They joke about diamond hands, but in reality, it ends up not being the case when they're actually living through it. And if you are going to have an investment thesis and be longer term, to your point, sizing the position will matter more than the position, because that allows you, from a portfolio perspective, to not have that natural inclination to react, because the drawdown of the portfolio will be less because you've scaled the position hopefully properly. Now, I want to talk about the safe banking side for a moment, because it seems pretty clear to me, at least, that you can't really have sort of a longer term investment allocation in the space until you have safe banking pass, and to your point, the custody issues resolved. And until you have that, it's probably more of a trading asset than an investment one. But what do you think it will take to finally get safe through? Because Todd Harris has been talking about it a lot. I've seen a lot of people talk about it for some time, but it never seemed to quite get any real meaningful momentum?
I mean, it's such a big ask, right? Because safe banking makes sense, right? So most people that don't understand safe banking, it was meant to protect the business owners in the beginning, and then it's become this whole political football, right? It's had wide support on both sides of the aisle. It could have passed in December, January through the National Defense Authorization Act. It had it had the votes it needed from the Republicans, and Schumer wouldn't bring it up, right? So you're basically asking the Democrats, and I'll highlight the Democrats, to not be dysfunctional, right? You're asking politicians to not be dysfunctional, right?
And that's a big ask in fairness, right?
That's it. That's exactly it. And now in this political climate, with everything that's just happened from Uvalde to Roe v. Wade, that's going to suck up so much oxygen. So like everybody thought that the whole safe banking thing, it's there will one day be a case study on this and pot stocks, because when the Democrats won Georgia and then took the majority in the Senate, everybody was just like, we're going to get legalized cannabis. Like, it's go time, right? You saw, like, the day that was announced, you saw, institutions doing these huge convertible deals with some of the top companies. And then, like, in March, we had a safe banking vote, and then safe banking passes. And I think it was the fourth or fifth time. And what happens? You had all of the primes tell the people that had, like their institutional guys, their hedge fund guys, hey, you can't buy pot stocks anymore. You need to sell, right? And basically, like this, like Wasatch, was forced to liquidate their entire portfolio. I mean, they were up like hundreds of millions of dollars. So they were basically forced to sell the top. So you had these banks like the JP Morgans, the Merrill Lynch's, whoever. The reason they did this was because safe banking passed, right? And I know people find that ironic, but it really isn't, because they want to be in the holding pot stocks business, but they want to be compliant, and they want to go to whatever regulator it is and be like, look, we don't have any cannabis holdings. Are we compliant? Are we able to do this? Right. So then you start seeing like the pullback in pot stocks, which at the time everybody just thought like, okay, this is just normal, like, pullback. This was expected. And then going, June, in like normal market conditions, to give you an idea, we see like it's the worst month for pot stocks. It's always been the worst month for pot stocks. And then as you get past the 4th of July, you start seeing volume come back. And that's exactly what we saw. So we saw like MSOS, the ETF, at like $35, and then it starts grinding back up. And then by July 15th, it's at like $41. Okay. And everything's bouncing because it's going to that model. And then what happens? Schumer, Booker, Wyden, they do a press conference, and Booker says there will be no safe banking without social equity, and I'll lay down in front of any bill that comes out, and collapse, right? And then we just start going down. And then in September, Rep. Perlmutter from Denver says, I'm going to stick it in the NDAA. And then at that time, all of a sudden, I think it was Morgan Stanley, it was either Morgan Stanley or Merrill Lynch. All of a sudden, they came out with a note, because now they're like, oh, they're going to put it in the NDAA. The NDAA has passed like the last 60 years. Like, that's a sure thing. So then they come out with a note that by January, they're going to try and custody the stocks for some of their clients that have been asking. And then what happens? Schumer spikes it, and you never hear boo from the custodians again. So like that's kind of the world that we're living in. So, I always looked at safe banking and 280E as a bonus. I think, one of the most detrimental things done to pot stocks in the last year has been the hijacking of this idea that safe banking was needed from a business standpoint, because the businesses have been doing great. I mean, there's growth here that you can't find anywhere else in the market, but because of where they trade, it's been the sector that's been the hardest hit, in the last 15 months, like by a lot. Yet the companies are killing it. Well, the top companies are killing it. I mean, the whole safe banking thing, it's you're basically like hoping, and hope isn't a strategy, that all of a sudden somebody waves a magic wand, and politicians use common sense and vote as their constituents want, which we just have not seen at all.
Yeah, and I think that point about Roe v. Wade delaying, any kind of real meaningful progress on safe is valid, right? Because now the focus of the politicians is always on the crisis of the moment, right? And let's face it, safe is not a crisis that will necessarily be kind of at the top of the list. Now, you mentioned the growth side. I want to hear your thoughts on how this is playing out outside of the U.S. and outside of Canada. I saw Germany is either legalizing or already has legalized recreational marijuana use. But talk about how the cannabis industry is playing out outside of our hemisphere here.
Yeah, so it's funny you should mention Germany. So that's really been the only place that I've really invested since March of 21, like really allocated capital to private companies. So basically, to give everybody a quick refresher, in around that time, so I think like March 2021, Angela Merkel was way ahead in all the polls, right? And then by August, it didn't look so good, right? And she ended up having to split power, kind of like Macron in France did with two other parties. And the two other parties wanted cannabis. So when I invested in this company, I was always thinking like, okay, it's a 3 to 5 year deal, right? And it wasn't even a cannabis company. It was, CBD, hemp, and wellness, but they would eventually transition to that. So once that happened, all of a sudden you had all of these people just kind of looking around, and a lot of infrastructure still needs to be built in the EU and Germany. So they're importing cannabis from different countries, whether it's Switzerland, Macedonia. Like I'm looking at a company right now in Macedonia, and like a company in Macedonia, for example. I mean, they're growing really good cannabis and they're exporting to other countries. So, I look at the EU as almost like looking at the US market in 2017, right? It's going to take a couple years to iron out the kinks, and not every country is just going to go, but you've got a massive population over there, and the ability to export. I mean, they're right in the middle of everything, so it is going to be really interesting. But the real benefit of investing in companies over there, especially if they go public, is they're going to be able to go to major exchanges right away. They're going to be like, it's kind of like, all right, well, Canopy, like they trade on the NYSE, right? They're liquid. Tilray, same thing. There's institutions buying that thing. That's like those things can move. Like it's such an added bonus, to get in on some of these companies ground floor. And, I think that they're also learning from some of the mistakes that the Canadian companies did. Yeah, it's going to be pretty exciting. And you do have companies like Curaleaf. They did a deal with this company called EMAC out of Portugal, which it was probably one of the best deals I've seen, because they bought this company out and then they sold part of the company to a private investor for like cash. Like basically, they just got like a risk free investment. So there are companies in some, well, Curaleaf is really Curaleaf is the biggest company in the world, and yeah, they're the only ones that are planting flags in the EU right now. So it is going to be interesting.
Yeah, I mean, it seems to me that that's sort of the real way to think about investing, in the space, because if EU countries are more friendly towards cannabis, the dynamics of growth are there like it is here in the States, right? So that to me seems like an interesting way to think about allocating. But how do you find those opportunities? Because it kind of goes back to the earlier part of the conversation when you would ask people to actually literally go to a location to make sure if it's real or not. I mean, presumably that's still very much a dynamic also when it comes to some of these startups in Europe. How do you yourself go about that due diligence? How do you find these kinds of opportunities on the private side?
The crazy thing about cannabis is it's a really small world, right? And I've been in the space enough to know people that are doing good deals and people that are doing really crappy deals. And every once in a while, something will just will come across, or I get introduced to somebody. So I was introduced to somebody in 2019, like right before COVID hit, and he was doing a facility in Spain to grow cannabis, and there was basically a monopoly. And I was really interested because I was like, man, I'd love to retire in Spain. And I was actually looking, I was like, oh, well, maybe this would be a nice jump, because trading in Spain is amazing. The market opens at 3:30. So I started looking, then COVID happened, and the whole thing, just because of all the delays and everything, just it never materialized. But, he was looking at Germany. He had found a company, and basically just he's like, look, I'm looking to take over this company. It's a franchise model. We've got like 30 locations and XYZ. And I was like, well, explain to me how it works, and just kind of doing my normal due diligence. And I was thinking, I was like, wow, it's such a low valuation. I've put money at much higher valuations in spec companies, right? And with some of these things, it's like if you could do 10 of them, and if one hits, it pays for the other nine, right? So yeah, that's how I got into it. Sometimes some brokers will come to me with something, or some of these like funds that are all over the place that I've known for years. And it's just kind of like, okay, well, do they do good deals? Like, is this a good deal? Look, and if you can't do it that way, if you don't have those relationships, if you're with like boutique banks, or I mean, some I wouldn't consider boutique. Like, let's say you've got an account at Canaccord or like Haywood Securities. So, like, I have an account at Haywood Securities. So, anytime something comes through, my broker will send it over to me, and I'll take a look and I'll be like, I'm not interested, like anything in the United States, like cannabis wise, like investment wise, I'm not interested. So yeah, I think, yeah, it's so simple. It's like you also go to all these conferences. Like, why do people go to conferences? It's because most the people that are paying to be there and present are trying to raise money. And like we have the MJ Biz conference in Vegas every year, which I go to, and they'll have like 1,000 vendors, and and maybe out of the 1,000 you find two that you like. But really, it's not anything that's just easy. Like, investing is hard work. My wife, because my wife and I have an investment company, and my wife is like, "Why do you put money in the market anymore?" I'm like, oh, "What do you mean?" She's like, "Let's just invest in private companies. It's so much better. It's always a better return. We always have long-term capital gains. It's kind of silly to do it any other way." But yeah, I mean, I think, look, there's opportunity everywhere in this space. If you're, and I see some of the people in here that I know that talk to institutional firms, whatever, like big funds, you know, 50 billion, 100 billion or more. And look, they're all interested, right? They're all really interested. They see it. You don't have to convince people to smoke weed. They're already doing it. I just started, my mom was recently diagnosed with something and she needs to put on weight. And so I gave her some drops because she doesn't smoke weed. And I don't want to give her an edible because it would crush her. I'm like, okay, put a couple drops in here. She's 71 years old. And she sent me a text before. She's like, I'm at McDonald's. She's like, I never eat McDonald's. I'm like, that's great. So there is a lot of viability in this space. The blue sky is really going to be once we really start tapping into pharma. And I think some of these companies in the US are already looking in that direction, right? But if what's the top cannabis company in the world worth? Or what are the top 5 cannabis companies in the world worth? If the US legal market is going to be $100 billion by 2030, what happens if we cut out the black market? Now you're talking about, 200 billion conservative number, right? And then it's like international export. I mean, we grow really good weed here in the States. And there's a lot of applications that have just never been tapped into. Everything from Crohn's disease to, PTSD. So, like if you look at the top alcohol companies, look at like Constellation Brands and Diageo and I don't know, Anheuser-Busch. It's almost $500 billion in market cap. That's 3 companies. Look, we're still in the midst of prohibition at the end of the day, right? That's the risk. But when the dust settles, you're going to own one of those like super unicorns in this space. Like I can't, like when prohibition ended, like 300 alcohol companies, something crazy like that. Now it's like, can you name 5? So it's going to be the same way. We're going to break a lot of things before that day comes, but that's what makes it exciting. The only companies anybody should be investing in, period, whether you're doing it now or you did it 6 months ago, whatever, are the companies that have, the cash flow to keep the business going and expanding. Because as soon as one of these companies has to do a down round financing at this price, that's it. It's game over for them. And a lot of the smaller companies like the tier 2, the tier 3s, their whole business model right now has become buy me out, right? And the tier 1 companies, they're like, nah, we can buy somebody similar for less money that's private, doesn't have the overhang, doesn't have, isn't asking for such a premium. So we could watch you guys die and then buy you at a fire sale. So like it's kind of a double-edged sword, right? Because nobody likes to see the stocks go down, but the tier 1 companies are getting much, much stronger, which ironically is what, Cory Booker and Schumer didn't want. Like that was their whole pitch. We're not going to give you safe banking, because to reward big cannabis. Well, guess what? You're basically squeezing all of the small businesses, the small, like the small public companies, and the only people that can survive are the ones that are in, all over the U.S. and just killing it in those markets, and so those companies get stronger and everybody else does. So I think, how the pitch works is pretty simple. Like, look, these are the companies you want to keep your eye on, right? Your Green Thumb, your True Leaf, your Pure Leaf, Cresco Labs, Verano. You explain like the custody issues, and you say, look, at some point, these things are going to, have normal tax brackets in which they operate in, and they're going to have institutional support. If you've got to chase them an extra 10%, who cares? Because when they re-rate, they probably go 1,000%, over like the next 2 to 3 years.
Everybody that's here, please make sure you follow Jason Spatafora. This was a very strong conversation, Jason. You're very well spoken, very knowledgeable. I encourage everybody to check out the research that he himself puts out on Twitter. And I think a number of these media interviews that Jason does are definitely worth listening to. Jason, I appreciate you coming on. Hopefully, maybe we can do a space with you and Todd Harrison at some point. I think it might be nice to have sort of a dual conversation with you two as well. And everybody enjoy the rest of your day. Thank you, Jason.
Thanks, buddy.
Thank everybody for joining.